It's time for the Trading Stocks Made Easy podcast. Each week, Trading Stocks Made Easy demystifies stock trading and investing so you can profit big. And now, here's the host of Trading Stocks Made Easy, the wealthy investor, Tyrone Jackson.
Hey there, it's Tyrone Jackson, and welcome back to Trading Stocks Made Easy. You know, on this episode, I thought I'd touch upon a few what I'm calling stock market myths. Now, here's what we know. We know that anybody who starts buying stocks directly and learns how to choose them can do well in the stock market. That's exciting because that means you, with the right mindset and the right education, could create financial freedom within the next 2 to 5 years. Now, if you start that process, there are some things that you need to watch out for. After you open your online brokerage account, you're going to be surrounded by a lot of what I call stock market myths. Ideas that other people are going to give you and pass on to you that may or may not be true. So what I thought I'd do in today's show is sort of take a stab at some of those myths so that you can keep a clear mind when it comes to trading and investing with the wealthy investor education as your foundation. All right, here's one myth I hear all the time. Someone who says, hey, I got a tip from a friend that this no-name company whose shares are at $12 are on their way to $120. Myth. Let me explain to you why. Stocks that come to the market at, let's say, $12, $6, $7, one of the reasons that they come to the market at that lower price is because there's no institutional involvement. The big names, companies like Facebook, Google, Microsoft, when they all went public, they came to the public market at a higher price. Why? Well, before a company actually comes public, they've sold millions and millions of shares behind the scenes to companies like Bank of America, JP Morgan Chase, banks in Asia, and those companies own millions and millions of shares. And as the company does well publicly, those same banks and institutions will buy more of the shares in addition to the shares that they got at their insider price. Right? So the idea of a stock starting at $6, $7, or $8 without some of these big institutions behind them, well, you're just taking a shot in the dark. It's nice, and occasionally there are companies that go from $6 all the way up to over $100, but it's very rare. So if you want to do really, really well, you can't rely on tips that you've heard from someone and those tips making you rich. Rarely does that happen. So remember, if that company that you are buying shares in doesn't have big institutional money behind it, the stock price is probably not going to rise significantly in the next 52 weeks. So avoid these tips. Now, I want to make a distinction between tips and trends. So for example, when you discover companies that do very well in the tech sector because of revenue growth and the company adds a dividend, that is a reliable trend. Why would a company add a dividend for shareholders? Well, dividends are your share of a company's profit paid out on a quarterly basis. Companies that are growing and hit a point where they can share profits via dividends benefit in a higher stock price because you do what? Now you've given something for the institutions to look forward to. Large institutions that buy millions and millions of shares, they love dividends because for those institutions, dividends are a form of residual income. Now, let me just stop here for a moment. Do you see the power of having an education, understanding how the markets function at the billion-dollar level instead of just taking tips? So there is a difference between a tip and a trend. Trends we can rely on. Tips are something that friends give us, and, well, they're basically for waiters and waitresses, not your online trading account. The next myth that I want you to know about is when someone says, ooh, I see a major pullback coming in the stock market, therefore I would never put my money in the stock market right now. I'm going to wait for this major crash to happen, and then I'll move forward with putting my money in the market. Do you know there are people who've gotten extremely rich writing books that are based on fear? Now, here's what's really interesting about pullbacks and crashes in the stock market. A pullback is when the entire market sort of kind of sells off, rests, and then money flows back into the market. A crash is something that we really haven't seen and since, I'd say, maybe about 40 years ago, maybe in the 80s, the whole market crashed. Pullbacks are normal. They're natural. They're part of the growing process. And pullbacks are times when, again, institutional investors actually take profits, put them on the side for tax purposes, etc., etc. But the person who's telling you that there's a major crash coming, guess what? They will be correct at some point. They really mean a pullback, but they like to use the word crash. Every economy has cycles of up periods and down periods. Every market, not just the U.S. stock market, every market has cycles of up periods and down periods. Common terminology is a down period is either a pullback or a dip. There are institutions who wait for the next dip, and what do you think they're going to do? They're going to buy when everything is on sale. So this myth that the whole market is going to crash, the bottom is going to fall out of it, Wall Street's going to deeply sell off, and we're going into another deep, deep depression, not true. If you ever pull up a 17-year chart of Microsoft, the Dow component, it has done extremely well through dips, pullbacks, and if you want to throw the word crash in there, you can do that. The key to investing, particularly on the Dow and S&P, is that you're willing to hold those great stocks for a long time. So we're going to avoid tips, and we're going to avoid the idea that a big crash is coming. Back with more tips and myths right after this.
Want to increase your stock market trading profits? Then you need to start your monthly membership to WITradeschool.com right now. Don't understand how to write covered calls for monthly income? No problem. Simply review Tyrone's latest stock trades in our video library as many times as you need. WITradeschool.com is all about helping you get the financial education you need to earn money in the stock market and change your financial life. Tyrone Jackson, the wealthy investor, has helped his students earn thousands of dollars per month trading stocks online from home. These are people just like you. So what are you waiting for? Follow Tyrone Jackson's red-hot stock trades and investment strategies today. Don't wait. Start your monthly membership at WITradeschool.com right now.
Welcome back. We're talking about myths today. Now, here's the other myth that I hear, but you have to be in the market already. You know, when you're holding shares, there are places you can go like Yahoo Finance to do free research on stocks, right? And one of the myths that tends to frighten shareholders is insider trading. Oh my God, Tyrone, the CEO just sold 3 million shares. Should I make something of that? Well, let's clear up this myth right now. When insiders sell, it's usually for good reasons. Sometimes they don't want all of their net worth to be wrapped up in the company that they're working for. Other times, they're selling because they're building a new home or they actually have a tax bill. Now, when you have a tax bill and you're enormously wealthy, do you know what you do to pay that tax bill? You sell assets. So the rich sell assets when needs be. Sometimes people who are inside of the company are also going to other companies and they want to free up some cash to buy some more shares for the companies that they're going to work for. So they hold their old company stock as well as buying into their new company stock. So trying to take an indication based on direction, good or bad, as to whether an insider is selling shares, not the best thing to hang your hat on. One of the things that I always want you to learn in the world of wealth is that wealth is a series of positive habits. Selling stocks and taking profits is a part of wealth building. Why do you buy stocks to begin with? To ultimately someday sell them at a profit. So insider selling, not a bad thing. Right? When I look at some of the myths that I'm talking about in this episode, I want you to remember that information swimming around in your head can be very toxic. So if you're using covered calls and dividends as a wealth building strategy, stick with that strategy through the ups and the down. Final myth I want to talk about here on today's show is this myth around mutual funds versus stocks. Some people say, well, I'm comfortable putting my money in mutual funds because someone else is handling my money for me. And that's okay. That's part of money management. It's a strategy. But if you notice, the wealthiest people in the world all own shares directly. Jeff Bezos, who these days is very concerned about the moon, I just love throwing that in there. How many shares of Amazon does he have? Does he have his money diversified in mutual funds? Probably not. He's a buy, direct, hold stock market guy. If we look at the richest people in the world like Jeff Bezos, Bill Gates, and others, they all buy stocks directly. That means you and I should be doing the same. And one of the reasons that they buy stocks directly is because their companies pay dividends. So when that dividend is issued, it's more money in their pocket. You know, you really can change your life with the right financial education. Trading and investing is not always easy. At some point, you're going to need a guide and you're going to need help if you want to go to the next level. I like to think of myself as your favorite wealth coach in all of the internet. Now, whether that's true or not, you'll let me know. But I am here to guide you through the market, help you up-level your consciousness so that you can have financial freedom and the financial life that you deserve within a 2 to 5 year period. Don't let negative people and negative ideas slow down your investing and holding strategies. Why? Because investing, holding, and selling covered calls works. Let's do what works, not what confuses us. Hey, this is Tyrone Jackson, the Wealthy Investor, saying I'll see you right here on the very next episode of Trading Stocks Made Easy.
You've been listening to the Trading Stocks Made Easy podcast. Be sure to rate and review our show on iTunes. While you're on iTunes, be sure to click the subscribe button and you'll automatically receive our next episode.